we can have a way to transact value over the internet. People will start having jobs within games pretty soon. I know that sounds dystopian. I think some of these jobs will not necessarily be as fun as games could be.
Welcome to our Innovatology podcast, where innovation meets technology and where the future is demystified. I am Marie, the founder of Marie Olivier Ltd, and I am empowering my clients in bridging IT and the business.
And I'm Cedric, a digital transformation program lead at AB InBev, the biggest beverage company in the world. But together, we are Innovatology, a platform dedicated to decode the complexities of the latest tech and innovations just for you.
Yay! So our journey began that we discovered that there is a gap for providing a platform not only for the experts in innovation and technology, but also for the wider public, where actually we can decode all of the innovations and technology for you. It started in biohacking summits in Amsterdam to, for example, Las Vegas CES.
And now we're here to share that passion with you. Whether you're looking to stay ahead of the curve in your career or you're just curious about the next big thing in the digital world, this is the place to be.
Why to listen to us? Have you ever wondered and were confused about how to actually use artificial intelligence and other technologies and buzzwords that actually are running around us? Well, then the Innovatology is exactly for you, where you can learn how to utilize it and integrate it immediately in practice in your professional and personal life. Innovatology. Dream it,
Plan it.
do it. Yeah!
All right. Welcome to our latest podcast, where we will dive back into the world of Bitcoin. Today, we actually have a guest on our platform of Innovatology, Nico Vereecke. Before we introduce Nico, we'll give a quick introduction of Innovatology again.
Yes, so Innovatology is a one-stop shop for decoding latest tech and innovations. I'm Marie, the co-founder of Innovatology, and of course Cedric, who you know. But Innovatology will today dive deeper into the topic of the cryptocurrency, which is definitely one of its own part when it comes to the technology. So so who we have today here?
Well, today I invited Nico, an old colleague of mine from business school, and he's currently an investor at BITKRAFT Ventures, where he's working at the intersection of blockchain and gaming. And this is where Bitcoin comes in, because Bitcoin is part of the blockchain technology. So I think he's the perfect expert for us today to get more into detail, go beyond the Bitcoin for dummies. But before we go into the podcast itself, Nico, do you want to share a bit more about how you got where you are today?
Absolutely. Thanks for having me, Marie and Cedric. By the way, one of the things that I used to do, which was hosting a podcast, and that stuff is not easy. So all the respect for you, and I think you guys are doing well already. So I studied with Cedric. We did business school together. Afterwards, I wanted to get into technology. I learned how to code, and in doing that, enjoyed the programming work. I decided to become a programmer, and after a job at a startup and at a very big bank, I joined a couple of friends of mine in a company in the cryptocurrency space. Company is called Keyrock. We were doing market making and liquidity providing, which is basically financial services that already exist in the traditional financial world, mostly done out of New York and Chicago. But these types of services did not exist within the cryptocurrency space yet. And that's where we were active. And that was my first professional experience within the, Bitcoin / cryptocurrency / blockchain space. Fell in love with the technology and what kind of new things it could do for the world. And decided to learn much more about it. I helped build another company after I left Keyrock, another company trying to do crypto payments. Ended up leaving that company too, and decided to focus my attention on one of my old passions, which was games, and cryptocurrency, which I thought was going to be the next major technological innovation platform for the world. I saw some potential at the intersection of blockchain technologies and games, and we can go into why that is. And that's when I decided to spend some time in that area, started a podcast about it, as one does. And through that, got in touch with the team at BitKraft, who then asked me to join their team. So BitKraft is an early stage gaming focused venture fund. So we're like an American VC. We invest in early stage companies. If you want, we can talk about the VC model as well, but as I understand it, that's not the point of this discussion. And so we have two types of funds. We have our traditional venture fund that invests in traditional companies in games, and we have our Web3 fund that focuses on companies building at the intersection of Web3 and games. And so as part of that, I spend a lot of my time within the blockchain space, more specifically within the blockchain gaming space, but that's actually quite a big part of the broader blockchain space. And so yeah, happy to share and respond and react to any questions you have around these technologies. And it's an exciting space, and it's less exciting than AI, which means it's probably a better time to look at it, if that makes sense, because technologies tend to get a lot of hype, and when there's less hype, those are the good times to dig into things.
All right, no, that's very, very interesting. I had a question on your journey of love with the blockchain technology and the cryptocurrency. What exactly made you fall in love with it? Like, can you give some more examples of like the things that you can accomplish with blockchain that triggered you so much?
So I live in Belgium, and Belgium basically has maybe like 5 major banks that provides like financial services to consumers. And my banking app, my financial app, doesn't work half of the time. It's terrible. My actually, like, over the past 2 weeks, my mobile phone has shown another balance, like a different balance from my browser webpage in one of my accounts, in my business account. And so one of the cool things about Bitcoin and blockchain more broadly is, and we can again go into this if you'd like, it basically allows us to create scarcity on the internet. Before cryptocurrencies, if I would send you an item or like a file through email, you would have that file and I would have that file. Like, there is no way to have digital scarcity. What blockchain allows us to do is actually manifest digital scarcity. Like, I can send you something. It's not a file, it's slightly different, right? It's a crypto asset. And the moment I send it to you, I no longer have it. It's a scarce asset. And because we now have digital scarcity, we now can have a value layer. We can have a way to transact value over the internet, which was not possible before. Before that, the only way to transact value was to use trusted third parties, which were banks. And so we would use banks, right? If I would send you guys money, I would tell my bank, send that money to the bank account at another bank or the same bank. And so the banks were responsible to keeping track of who owes what and has what. But now we're actually taking this power away from these financial institutions, and we're making it decentralized, and we're building it on top of the internet. Now, I've already given the example of in which ways the current financial infrastructure is very unuser friendly. And one of the reasons for that is that there is basically no competition, right? If you want to start a new bank, you need millions in starting capital. You need to get your banking license. You need strong connections. And so the current banks have like this very luxurious position that they've been able to do what they do. They make a shit ton of money just by holding our money, and they're run terribly. They're very inefficient, but because there's no real competition for that, they get away with it. And so I think that I'm in favor of competition. I think it's healthy. I think that every company should be pushed to perform at its very best. And I think that a lot of what's happened in the financial industry was a term called regulatory capture, which is a bunch of like a small number of players basically took control of everything and made sure that no one was able to actually innovate and disrupt their business models. And so I think that the blockchain brings some fresh innovation to the financial space. And I think that it will benefit consumers in Western countries, but it will benefit consumers in emerging countries even more. I'll give you a final example that I really like using. It is maybe changed, but it was like illegal for women to have a bank account in, I believe it was Iran. And it was also illegal for them to have a job. And so they were dependent from their father essentially when they were a kid, and then they got married, and then they were dependent on their husband. The cool thing about blockchain is and Bitcoin is they can now work, they can do work on the internet, get paid in Bitcoin, and finally like have financial freedom for themselves. So they can capture their own value, and they're no longer dependent on the man that doesn't really like, they can be free. And I think that's in the end what this is about. And that's why, yeah, I ended up falling in love with this technology and thinking that it's going to change the world for good.
We were just last week in London in startup Algebra. And actually, like if you want to start with financial services or anything around finance, London is place to be. And Algebra is actually helping the banks to digitize their services or their software, etc. They want to also go in Belgium to help, for example, unnamed, I will not name here the banks, but definitely also there are two different financial sectors, which is first is the formal one. You need to go through the certifications if you want to get into the formal process of the banking. It's let's say more clear way, it's traditional way of having your bank account. And then there is the blockchain, which is the decentralized one. I think that lots of people, when you talk with them, for example, having even like informal discussion or formal discussion, there is a lot of connotation around that blockchain is like shady at some point, that a lots of shady stuff are happening there. So what is your point of view on this stuff? Because in traditional banking, there is a lot of regulations, but these regulations actually help us to know that everything is clear, everything is under legislations, and there are controls. But in blockchain, there are a lot of shady stuff happening. So what is your position on that?
Mm-hmm. Yeah, it's true, right? Because blockchain allows us to transact value over the internet, like it's more free. And so whenever it's more free, it's good for people that don't have a lot of freedom, but it's also good to do things that are actually not legal, right? So you can do drug-related commerce, for example, over like using blockchain technology. What's important to keep in mind there is that, for example, Bitcoin specifically is actually a terrible way to do any illegal activity and to pay people for illegal stuff. And the reason is that the Bitcoin ledger is transparent. Like the way this works is if I want to send you guys some Bitcoin,
Oh yeah, you can if you want.
Good. I'll see how tough your questions are today, and I'll consider it. So the way it works is like I send out a transaction to the world, and all participants, all nodes within the Bitcoin network, take that transaction and put it on top of the Bitcoin ledger. And so it means that there's a trace from all Bitcoin, and all of that is very transparent and visible. And so there's pretty much no criminal activity on the Bitcoin network anymore because it is transparent. And it's not a very strong counter argument, right? But two things. So one, it's transparent, so it's not really happening right now. Two, it's there's still an infinite amount of illegal activity more being done in US dollars, like cash. And finally, I think that giving criminals the ability to do new things, it's almost always a byproduct of new innovation. And so if we want to do new things, we have to realize that will also allow parties that we don't trust to do the same. And at that point, it becomes a question of, is the added value to society, is it going to be a net positive or not? And I think that's in many cases it is.
Like, how I actually kind of imagine it with blockchain is that it's actually counterintuitive against illegal activities because of the ledger, where if you do a transaction, you add a block, a component into that ledger, you can't whitewash it anymore. It remains there stuck for eternity, right?
Mm-hmm. Yeah, exactly.
And here I actually had a question because we tried to explain it to our audience as well. Like a Bitcoin is a ledger of transactions, and it can be mined or it can be exchanged on a cryptocurrency market. But what is it that actually then physically in a certain, like, can you give a physical representation of what it actually means to mine a Bitcoin or to mine a cryptocurrency?
Yeah,
Like,
I think the term mining is it's and it's not a great way to illustrate or to like visualize what actually happens. So basically, Bitcoin is a network of computers that have a shared list of a bunch of transactions, like at a very high level, right? And so if I send you guys some money, some Bitcoin, I send out a transaction, and all of the different nodes, all of these participants in the Bitcoin network, they write down like, Nico sends, like 0.5 Bitcoin to Innovatology. You've heard about blocks, right? And so all of the transactions that are being broadcasted by people that want to do transactions get put into a block. And these blocks get put at the end of the blockchain. And so the blockchain is basically a very long list of blocks, and each block contains like a few thousand transactions. There are a bunch of nodes. All of the nodes in the network are trying to be the one that put that block on top of the blockchain. In order to do so, they have to solve a very difficult mathematical puzzle. We're getting into the weeds of things, I know. Feel free to like ask me to explain something better. But basically, mining Bitcoin means that you're trying to put this block on top of the blockchain. Only one node ends up being able to do that. It's basically a race to be first, and the one that is first gets to put the block on top of the blockchain. And if you do that, you can like every block that gets created gets to create a few new Bitcoins out of nowhere. And so if I'm not mistaken, the Bitcoin reward today is 6.75, but I might be wrong. It might be different. But every new block is basically the generation of a few new Bitcoins. And the miner that puts the block on gets to send those Bitcoins to themselves. And so that's basically the fee that they receive for the work that they do on the Bitcoin network.
and this is also, and you have a limited amount of blocks. That's why there's also a limited amount of Bitcoins at the end that will be there.
No, so the way this works is basically the purpose of the Bitcoin that gets given to miners is essentially to incentivize them to do the work of mining. Because as I said, they have to solve a very complex mathematical puzzle. They're racing to solve it, and that costs a lot of energy. Right. So when you hear about Bitcoin uses as much energy as a country, it's because all of these nodes together are trying to solve this mathematical problem, and all of that energy is being spent just to secure the Bitcoin network. And what happened was there was basically a reducing rewarding scheme. So if you were mining Bitcoin in the first days of Bitcoin, you would receive, and I don't know the exact numbers, I think it was maybe like 100 or 50 Bitcoins every block that you would mine. But that's rewards as Bitcoin grew as a network was halved every time. So that like every X number of blocks, that reward would be reduced by 2. And that is what it's called, the halvening. And so if today I mine a Bitcoin block and I get X amount of Bitcoin for having mined that block, in a few months from now, after the halving, I'm going to get half of X as a reward for mining that block. And Bitcoin right now has a fixed number of blocks, but as long as Bitcoin lives, there's going to be new blocks being created every 10 minutes until infinity. And the reason why the amount of Bitcoin is not is limited is because the halving happens every 4 years, and so by 2130 or so, the amount of Bitcoin being given to miners, new Bitcoin, is going to be basically zero at that point. And so that's when there's no new Bitcoin being created anymore.
That's interesting. So, I mean, at some point, it will no longer be, let's say, relevant to start up a Bitcoin mining business, right? Because the reward is going to be so low.
So that brings us to basically, if you're a Bitcoin miner, there's 2 types of rewards that you get. The first one is the block reward, is what we just talked about. But the second are the like transaction fees. What's happening is that when I want to send Bitcoin to you guys, that actually costs what we call gas or it costs some fees. Because there's a lot of people who want to send Bitcoin transactions. And so there's basically a bit of bidding going on. So when I send you guys a transaction, I would send, okay, I want to send Innovatology this amount of Bitcoin, and I'm willing to pay this amount of fees for it. And what happens then is that the miners basically take all of the transactions that there are, and they take all of the ones that are willing to pay most, right? The most amount of fees. And so the reward for the miner is one, the amount of fees that are being paid by all of the people that send in transactions, and the mining fees that they get natively from the network. And so the idea is that over time, when we reach 2100 and the mining fees that are part of, the mining rewards that are part of the mining the block are so small, that's when the fees will start taking over.
And here, Bitcoin, I think, is the most popular cryptocurrency. Why do you think it's the most popular, besides being the first?
Well, my answer was going to be because it was the first. And so I think that's it's a tough question, right? Because what do you mean with popular? I would say Bitcoin is the best known, and it's best known because it was first, and because it was first, it's also accrued the most value. So the value of all Bitcoins that exist today is the highest. I don't know what it is by heart. It's going to be a couple of 100 billion, maybe even I actually might be actually be over a trillion. And so that's why people know it. That being said, if you are active within the blockchain industry, within the cryptocurrency industry, you'll know that the Ethereum blockchain is actually more popular with people who are actually trying to build things than the Bitcoin blockchain. There's a pretty important distinction between Bitcoin and other blockchains, and basically it boils down to you can do more things with the Ethereum blockchain than you can with a Bitcoin blockchain. The reason why Bitcoin is still more valuable than Ethereum is because the value of something is defined by like how much people are willing to give to it. And there's a lot of money that's flown into Bitcoin now, especially with ETF that was launched recently in the US, that doesn't really understand blockchain and that considers Bitcoin to be the safe bet. And so I think that this is the fact that Bitcoin is more popular or higher priced is more a function of like not understanding the technology and taking the safe bets than it is a like a true illustration of like what you can do with it and the value that it will add in the future.
Yeah, it's also like on Instagram, you see like all over the social media, like give me Bitcoin and I will do this or whatever. Like everybody's using like Bitcoin as even like equals to the cryptocurrency in general. But isn't it also at the end, for example, you also don't say like, yeah, I prefer dollar because it's like older than euro. It's at the end is the cryptocurrency as any other. The Ethereum is definitely like a more advanced in what you can do with it. I think that also Web3 is more built on Ethereum than the Bitcoin. Dogecoin was just like popular because Elon Musk mentioned it once. But yeah, it's I think maybe can we also like say that actually it's something like what we have as a currency currently in our normal world, let's say, that we use euro in the Europe, dollar in America. So like in cryptocurrency, it's not geographically limited, but it's on the usage or what you want to actually do with it.
Yes, there are some geographical preferences in different coins and tokens, etc. But I don't think these are very relevant. Um, price is often a function of like supply and demand. And so, yeah, I don't think there's a lot of like most people that are like, oh, this blockchain thing, it interests me, so I'm going to buy some Bitcoin. And that's basically what pumps up the price. But I agree, there's more stuff to be done with Ethereum, and it wouldn't surprise me that Ethereum will at some point as a network be more valuable than Bitcoin. But that being said, there is a bunch of blockchains that are trying to do the same thing as Ethereum. And so, if I put on my personal investment hat and think about, okay, for my retirement, where would I put my money? I think I'm personally still mostly allocated to Bitcoin because there's only one Bitcoin. There's never going to be a second Bitcoin. And Ethereum, something like Ethereum, still runs the risk of being replaced by a smart computing platform, which is what it is. That just does things better. And I don't think that there's going to be anything like Bitcoin that does Bitcoin better than Bitcoin does.
Mm. And the other cryptocurrencies, do they also have like this halving event like Bitcoin has, or Bitcoin is the only one in this case?
Not the only one, right? There's a few others that have similarly issuance schemes. Most second generation and beyond blockchains are not based on a proof of work system. So proof of work, as I said, right? It's basically like you're a miner, you validate the network, you make sure that new blocks get created, and you make sure that if Nico sends a transaction, you verify that he has enough Bitcoins to be able to send that transaction before you add it to the blockchain. And so you do all that work. And as a part of that, you do these complex mathematical computations. That requires a lot of energy, but that is basically like that energy is basically what safeguards the network. If I want to hack the Bitcoin network, that could happen through what they call a 51% attack, which would mean that I would have to control more than 51% of the energy that's being used to like validate Bitcoin today, which is, as we already said, more than some countries. And so basically, energy is what keeps Bitcoin safe, and the cost of energy is what keeps Bitcoin safe and secure. Other blockchains take a different approach. They usually use a concept that's called proof of stake. Proof of stake is basically, instead of using computing power to look at transactions, see if they're correct, and if they are, putting them on top of the blockchain, I'm going to take some ether, and in most cases it's 32 ETH. So you take 32 ETH, which is roughly 100K right now, and I'm going to put that at stake, and I'm going to start validating transactions. If I make a mistake or I do something wrong, then my stake can get removed. I can lose my stake. And so basically, in that way, they're using economic incentives to secure the network, while Bitcoin uses more like computational incentives to keep the network secure. So it's a slightly different strategy, but a key difference is that almost all next gen blockchains use way less energy to like keep the blockchain running. And so from that point of view, it's a good thing.
All right, interesting. So more about the halving. I was just making sure I have the
Get to business.
yeah.
About the halving.
I was just looking up that I have the date for sure. So on the 17th of April, indeed, Bitcoin goes from 6.5 to 3.25. What will be the impact you think on the evaluation of the Bitcoin, and what kind of investment advice would you give first on Bitcoin itself in this context? And yeah, let's start with that.
I have to be careful, right? Because I'm like a registered investment advisor in the US, and so I can't give anyone investment advice, at least not about these things. And so, but I can tell you what I do, right? I got very convinced by the potential of blockchain, as I laid out before, and so for that reason, I think it's like I made it a part of my my personal like allocation of my saving, like my pension funds. The halvening is one of the problems with the halvening is that we already know the halvening that's going to happen in 100 years from now. And so people tend to be like smart enough to predict these things. And so there is never like a very direct correlation with the moment the halvening happens and like the price of an asset and the price of Bitcoin. But they tend to be like correlated in a way where around the halvening, the price of Bitcoin starts going up. And so one thing that you know is that I've already said this, the price of an asset basically depends on supply and demand. What's happening with supply is that supply is halving every 4 years. And so after the 17th of April, the supply, the net new Bitcoins that will get created goes from 6.5 Bitcoin per 10 minutes to 3.25 Bitcoin per 10 minutes. That is quite a significant reduction, right? And so given equal demand, a lower supply means that the price starts going up. That's the law of supply and demand. That being said, it is one of the problems that we have and that I have is in this space, there is actually no real world value being created. So the total, if you think about how to value things, like a company is valuable because it produces things that people want to buy, that people are willing to pay for. And so, Cedric and I, we sat in class and we were like calculating the discounted cash flow of the revenue streams and the profit streams of companies into the future. If you try to do that for blockchains, given existing like usage, they're wildly overvalued. And so from a fundamentals perspective, it's difficult to put a price on these assets just because like the current pricing doesn't really make that much sense. And so we have these new asset classes that just don't fit within our traditional financial models that we have. And so for that reason, everything is basically speculative. And so basically people think like this, okay, there's going to be a halvening. I know it like really doesn't change, like it doesn't impact it historically, but other people will think that it will impact it. And so other people are going to start buying. So I'm going to start buying because other people start buying. And because I'm buying, other people are also buying. And so it's this whole very complex, more speculative driven dynamic than like actual fundamentals. So, my general philosophy has been like, if you believe in this, I believe in this. I've decided I'm going to make this a part of my pension, of my investment allocation, and I don't try to trade. And I don't think people should try to trade because trading is a zero-sum game or often a negative-sum game because you pay fees for trading. And so just sit on it and hopefully your kids will thank you.
I think that's a good one.
Yeah, I'm struggling with the fact that like everybody in Belgium, like everywhere where I sit, people just like give me the advice like you should have a pension, you should invest in your pension. Here is the pension plan, etc. I just don't believe in it. I mean, like the best pension is that you are in control of your own money and you decide where you put your money. So yeah, so I really like this, what you said about the pension, because it gives also people that they have other choices, that they should not always just like go with the first choice of the bank when they are listening to the first people when they sit in the bank, and that they can also make their own choice, either put it in the stock market, normal stock market, or the cryptocurrency, or having it in save account, or like putting it in the real estate. There are unlimited possibilities for this.
If you're enjoying our content so far, make sure to follow us on our social media channels.
Like for example, LinkedIn, where you can become an integral part of our Innovatology community. This space is for like-minded digital nomads like you, who can share, collaborate, and also comment on different tech and innovations.
So don't miss out on this opportunity to network with people who are just as passionate about technology as you are. And let's embark on this journey of innovation together.
I think that's good for the Bitcoin part. What I want to go further into is the blockchain or web and Web3 in the gaming. What your focus currently is, Nico? Because I know at AB InBev we've also developed, let's say, a Web3 game called Titans. I mean, it's nice. I've seen it. It's being developed. There are some cool gimmickry, I think, that we can do from a branding perspective. But maybe from your expertise, you could help clarify a bit for me more. Why would gaming start to trend towards the Web3 environment and the blockchain technology?
I would dare to change that question around and say, like, why would blockchain technology be applied within games? Pretty simply, I think that a lot of games, like I'll give you the base thesis and we can go very deep in this because like this is literally what I do, right? But the base thesis is this: games have items. Many games have like items that you can have. All of these items, they're loaned to you by the gaming company that has created the game and built the game. So I'll give you one example. Counter-Strike is a very popular first-person shooter game. It's a game where 2 teams of 5 shoot each other with guns, very simply. You can, in that game, own skins. Skins are basically like, oh, I have my gun, and if I put a skin on it, it looks different. And there are skins that everyone has, but there are also a bunch of like very, very rare skins. Now, if I own a skin within Counter-Strike, I can use it, I can show it off, and it actually has some economic value. So some of these skins have been traded to others for like hundreds of thousands of dollars.
Yeah, I've seen
And
that.
so it's pretty impressive because some of these skins. So first of all, there's millions of people who play the game, and there are some skins that are like so rare that only one exists. And so then they're so rare and people want to use them to show them off and they're willing to pay a lot of money for it. People are, you know this, people are vain. They want to show off. That's like everything we want to do. And so on the internet, we also want to show off. And you can show off by owning things that are unique and very rare. And so that's what's happening there. Now, one of the problems there is that Counter-Strike is built and published by a company called Valve. If Valve decides that they don't like me anymore, they can take away my super rare skin that I just paid a couple $100,000 for, right? And there's nothing I can do. And so what the blockchain does is blockchain says, instead of having the record of ownership within a database that's owned and ran by the company, we're going to track ownership of that item on top of the blockchain. And once it's on top of the blockchain, there's no one that can take it away from you. Similarly to Bitcoin, right? Like I have a Bitcoin account. There's Bitcoin on there, and there's no one that can do anything with that account. I also have a bank account, and my bank, as I already said, shows me different numbers on how much I have on my bank account. So I actually don't really know how much I have. And my point is that obviously banks, it's illegal for them to change our numbers, but we're still dependent on them. There's like this counterparty risk. If your bank goes bankrupt, you're in trouble. If you own a skin of $100,000 within Counter-Strike and the company that owns Counter-Strike goes bankrupt, shuts down the game, it's gone, right? And so there's all of these risks involved with owning things and putting value on things that are basically owned by other entities. And so that's where the blockchain comes in. Blockchain allows us to have true digital ownership, which is I can own things digitally on top of like on the internet, and that is secured by the blockchain. So that's the very high level thesis. And we have a ton of games that have these items that have value, and we think that blockchain will basically allow us to have even more value. And so I think through blockchain we'll see items that are worth millions in the future.
And it's also the whole idea of Web3 that like the ownership will be the main value because let's say the internet, the Web2 is not about ownership, it's about collaboration, contributions. But let's say that you, for example, exchange via internet PDF, you sign it, but there is not really true ownership like encoded that you would know like who actually owned this exact PDF, which with Web3 should be more like prone to that you will be able to find within the code who is the owner of the exact PDF of the memberships. We actually were in Las Vegas earlier this year, and we were speaking with the developers of the app. So they're developing an app which is how to monetize your lifestyle.
Sniper.
Yeah, we also made a vlog about it, and they were dealing with developing an app where you can actually own your own lifestyle. So let's say that it's something like Instagram, and you want to monetize your lifestyle. So everything what you have on yourself, or if you are on vacation or whatever, people can go on your account on a Sniper, it's called, and they can, for example, buy your shoes. You will get commission, and as the owner of your own Nikes, and they can get the Nikes, for example, with some really nice discount. And they want to put it on Web3. However, currently they are using normal currency, but they want to put it on Web3 and use cryptocurrency for it. But you need to be really gentle with the people, because if you would promote it at the beginning, like, yeah, we use cryptocurrency, like you can use Ethereum to buy Nikes, then like lots of people would be like, hell no, like I want to use my dollar, I want to use my euro, I don't know, like Ethereum is like some evil stuff. So what they do is like it's running in the backend with cryptocurrency, but they are like revealing something like 2.5, so like Web 2.5. And then when there will be much more positive awareness about the cryptocurrency, they want to go all in because they will be already prepared. They're already developing this way, but they are still showing the people, let's say the nice curtain of yeah, we use euro, we use dollar. And then like when people will get a better awareness about cryptocurrency, Web3, what is it, etc., they will just put it up and they say, yeah, you can use your Bitcoin, you can use your Ethereum, and this is where you can make your lifestyle actually good for your
Context.
buckets.
That was a really cool example that we saw at CS, we leveraging Web3. And for the games, like if I really understand it very well, like the concept of the game itself doesn't change. But for example, right now I'm finally playing Harry Potter, no, not Harry Potter, Hogwarts Legacy, but like the reward that I would get, for example, like a specific type of wand, that would be mine and not the game's
My wand.
ownership, basically on the digital platform. Or like in FIFA, you also have like the FIFA cards with like the players. That would be my player, not one that I borrow from EA Sports, basically.
Yes, and you mentioned the concept Web 2.5, which is, it looks like the normal application in the front, but there's some Web 3 technology in the back. And so that's what you describe, and that's why I said like this is like the first level or the first layer of advantages that blockchain brings. Your particular example, Hogwarts Legacy, it's a single player game, and so I don't think that we'll see a lot of like value being added in single player games for Web3 technologies, just because, like as I said, like it's internet native technology. You need the internet to validate these things, and so items generally within single player games don't tend not to have that much value. That being said, like I think that there will be some interesting things done with like single player games and Web3 as well. But I think that will take a while.
It would be more relevant for World of Warcraft than in the future.
Exactly. Or what you mentioned, like FIFA as well, right? FIFA Ultimate Team, where instead of like actually playing FIFA yourself, you own players and then you have these player cards and then you can make a team. And that's a more like you have a lot of like collection centric games. So that's one example. The other examples are like collectible card games, like Magic the Gathering or Hearthstone. These are all very like intuitively like intuitive examples where it makes sense to, instead of owning these things and these centralized servers, owning them yourselves, which allows you to trade them as you wish. But that's when things become interesting and you start observing the advantages of Web3, and that is, maybe I have a super rare card within a trading card game, but I'm not playing myself. Like I could rent it out to someone. They would pay me maybe $1 a day to use it. They can play with it. I'm not using it anyway, and so all of these things can be like coded into the blockchain, right? And so that's one thing. Another thing is maybe I have this super valuable item, but I can tokenize it, I can fractionalize it, and I can like turn it into 100 different shares, and then I can give shares away. You can start doing all of these financial operations, which most of them are going to be stupid and you shouldn't do them, but it just gives you the possibility and the flexibility to do these things that you wouldn't have for like non-Web3, non-blockchain games or other applications.
Yeah, I mean, I think that's the coolest thing about blockchain and cryptocurrency in a way. Like real currency, if you rip $1, it's worthless. If you split a Bitcoin in half a Bitcoins, it's still worth a lot of money.
You can take 100 millionth of a blockchain, and that's like the lowest that it goes. That's called a Satoshi, by the way. And so you can divide a Bitcoin up into 100 million little Satoshis.
I also really find amazing that like how the cryptocurrency, the blockchain, like is, let's say, fitting the Web3, because like Web3 is the blockchain, is the cryptocurrency, is the currency inside the Web3 in the future metaverse, etc. Was there first the blockchain and the cryptocurrency, and then people started to speak about Web3, that yeah, we can actually do something with it. We can have the space online. We can have the transactions. Where is the transactions? There is also then like different activities, etc. It's also like from the old ancient times, like when there was a market, when you had the cryptocurrency, people were like assembling around it. So was first the blockchain and the cryptocurrency, and then people were like, oh yeah, we can actually make the space, the Web3, which then in the future will be metaverse. Because metaverse, let's say, is also a lot used word, but lots of people who are around Web3, they say that it doesn't exist yet, but it will. So what is your opinion about this?
I say that I invest at the intersection of Web3 and games, but in reality, I don't even know what Web3 means, right? It means so many things. And so I don't pay that much attention to like the particular names that people use for things. So it's all very much a zeitgeist and a hype kind of thing. It tends to be so. What tends to happen is, something gets some traction. So in the beginning you had like Bitcoin got traction, and then suddenly everyone was doing Bitcoin. And because everyone was doing Bitcoin, the actual people that were doing cool things with Bitcoin were like, I don't want to be associated with these enterprises that are trying to be cool with Bitcoin, that are putting Bitcoin in their tagline everywhere. So you know what? We'll find something new. And I was like, okay, let's take blockchain. Okay, we're doing blockchain now. And then the next cycle, all of the big banks are like, oh, we're going to do blockchain as well. And suddenly blockchain was no longer cool. And so you just keep having these things. It goes from blockchain to cryptocurrencies, from that to Web3, from that to the metaverse. And so I wouldn't pay too much mind to like the terminology itself. No one agrees on what the metaverse actually is. Like, I don't use that term anymore, because like, no, if no one agrees on what it is, then like, why even, like, it doesn't mean anything. My general thesis is that we are like, the internet is becoming, one, more and more gamified, and then two, with that gamification, there was going to be more ways in which we're going to be transacting value over the internet in the future. And I think that blockchain technology, Web3 technologies, cryptocurrencies will be like a foundational element of that. And if you want to call that more gamified internet, if you want to call that a metaverse or a virtual world, you can. But yeah, that's generally why I'm excited about the space, why I'm active in this space, and directionally what I'm investing in as well.
Probably last question from me. What do you mean by the world is getting to be more gamified? Is it like also like the real world, or are you really speaking about what does it actually mean?
It's a really good question, and a tough question as well. I think that's the internet, the first internets that we saw, like Web 1, was basically like Wikipedia, where all like static pages, right? And so as the internet has evolved, it's become more and more like personalized, and like changes to what we want and also what we like, right? Like if you scroll through Twitter or Instagram, the content that you see will be defined by your likes, your follows, but also like even the posts that you open, right? So as you open certain posts, it's going to know that, oh, Cedric loves to look at these types of pictures, right? I wouldn't say what they are.
You're looking at me.
Maybe nice cars. Nice cars. He likes nice cars, so I'm going to show him nice cars. So, right? And so the internet is already like adapting to us. And I think that the internet is becoming like, it's starting to look more and more, or will look more and more like a game. And it wouldn't surprise me that either the internet is becoming more and more like a game, like a World of Warcraft, like these types of experiences, or we will start spending more and more of our time on the internet within games. It's already today that, kids these days are hanging out in Roblox, or kids these days are hanging out in Fortnite. They get home, they get behind their computer, and they're like, oh, they're just hanging out there, and then they see their friends, or maybe they're on Discord. And so I think that just gaming will become more prominent as a way of interacting, and especially virtual worlds will become a place where we spend more and more of our time. And maybe finally, I'll give you my, like, it's kind of dystopian, right? But I think that one of the reasons I think that building virtual worlds where we can have real economic activity is important is because if you look at the evolution of AI today, and I'm sure that you guys can do a separate, or have done a separate episode on AI, I think that a lot of people will have no way to add value to the world in a traditional sense, like pretty soon, right? The moment we have fully autonomous driving cars, like taxi drivers and truck drivers, like all of them, it's like they won't have anything to do. And so I think that's a problem. One possible solution for that is universal basic income, right? Because how are these people going to be able to sustain themselves? Like, either the answer is universal basic income, or, and I think that's one of the reasons why we should be doing this, we will need to create economies and economic activity within virtual worlds. And I think that's like, people will start having jobs within games pretty soon. I know that sounds dystopian. I think some of these jobs will not necessarily be as fun as games could be. But I do think that, like, if we don't have universal basic income, we will need something like this. And that's why I think games are important. And that's why I think that like cryptocurrencies and the Web3 is important as well.
I just see Cedric face like, oh my God, I want to have position in World of Warcraft tomorrow.
I would love to be the tavern guy.
Mm-hmm.
No, I also don't have any questions more on this, Nico. I think great insights on blockchain, and especially good closing messages of the gamification of the internet world. So thanks for sharing your expert insights.
Thank you for joining us on this Innovatology episode. Your feedback not only inspires us, but also empowers our Innovatology community.
So remember to follow us on our Innovatology channels because we've got plenty more insights, stories, and guests lined up for you in the future.
So hit that button follow and you will not miss any of the future episodes.
This is Cedric
And Marie,
your guides on the journey of innovation
and technology. Yay!